Hi there, this is Focus on GRA, and I am Carolita Edwards. This week, we will tell you about the removal of VAT on lubricating oil, and a tax specialist will join us to provide answers to your frequently asked questions. These and more on this week's program of Focus on GRA.
We want the best facilities that this country could ever see, the best infrastructure and public utility, the best education for children in this country, the best health services and public security. But if we want to see such development in every community, then we must be fair and pay we full share of taxes and duty. Want proper bridges and coca, pay your tax. Better roads and safer, pay your tax. Better electric power, pay your tax. Clear potable water, pay your tax. Better schools and teacher, pay your tax. Better nurses and doctor, pay your tax. Better police and soldier, pay your tax. For a better Guyana, pay your tax.
With the recent removal of value-added tax on lubricating oil, Fabian Clouds visited several auto mechanics to gather persons' views on how this tax measure would benefit them.
Vehicles like trucks account for almost a fifth of global oil demand, or around 17 million barrels per day. This is according to the International Energy Agency. Engine oils best suited for these types of vehicle include Mobil 1 Extended Performance Motor Oil, Amazon Basics Full Synthetic High Mileage Motor Oil, Castrol GTX Best Conventional Motor Oil, and Shell Rutella T6 Diesel Engine Oil. For businesses like Sankar's AutoWorks, which supplies, among other things, engine oils, the removal of value-added tax on lubricating oils will accrue immensely to both the business and the consumer. Owner of the company says Sankar is of the opinion that one only needs to consider the types of machinery in operation today and the amount of engine oil they require for maintenance to realize how the benefits will be derived.
For businesses and for consumers, it's a win-win situation because here it is that VAT is 14% of the final price of the product once it's gone through distribution to the retail outlets and selling. So it adds up to quite a bit of money. 14% is a lot on a ticket item that could probably be $5,000–6,000. It's $800, $700 to $800. So right away, the consumer gets a reduction of about $700–800 on a bottle of oil. If they're changing 3 times a year, it adds up $2,400. For some people who have trucks, it adds up even more significantly because they're buying by the pails. So when they buy a pail of oil, it's $20,000. So it's a bigger saving for them. And then trucks work harder, so they change oil more frequently. So it does impact both commercial and private.
Valvoline Synthetic Oil, the flagship brand for Sankar's AutoWorks, is sold at its Seaford Street Campbellville main office and branch offices at Quamina and High Streets.
Our retail department sells all kinds of oil, not only our main flagship brand, which is Valvoline. We sell Shell and other brands also. And so we give the consumers a choice. So people pick up what they like.
Valvoline Synthetic Oil is also popularly sold at RRT Enterprise. The automotive repair product supplier and tire dealer is located at 107 Regent Street border.
We sell brands like Valvoline, Mobil, the Mobil Super. We sell Shell, we sell Castrol. Then the Castrol has a wide variety as well, like the 1030 Magnatech, and you can also have the 530 in the synthetic, the fully synthetic, which we call Edge, the Castrol Edge.
RRT believes that the recent removal of VAT on lubricating oil will give more spending power to the consumer.
This is beneficial to customers, or we say the consumers, because it gives them the opportunity to spend more. Because let's say they come to do a service at RRT Enterprise, and the price for lubricant was like 6,000 and something plus the VAT. There's removal of the VAT now, so they're only paying basically like 6,500, which is VAT exclusive. So we appreciate the fact that the VAT was being removed from the lubricant.
The removal of VAT from lubricating oil at the point of importation and local sale took effect from Tuesday, July 12, 2022, following an order by the senior minister in the Office of the President with responsibility for finance, Dr. Ashley Singh. The order amended paragraph 8 of the first schedule to the VAT Act, which lists all zero-rated items. Where VAT has already been paid, the zero-rate status enables registrants to reclaim VAT in keeping with Section 35 of the VAT Act, Chapter 8105. The Revenue Authority is imploring suppliers to ensure the benefit of zero VAT passes on to the consumer and to desist from price gouging and other unethical practices. This is a position supported by drivers like William, who works at the Demerara Harbour Bridge Company, and Joshua Miller, a mechanic at Brazo's workshop on Newmarket and Water Street.
I would like to encourage them to remove the VAT and don't jack up the price, but take off the VAT and leave the price the same way.
They shouldn't raise the price even though the VAT is off. The oil prices should be one standard price. If the removal of VAT, they obviously did it for a reason, right? So if they drop VAT off of the prices of oil, it's going to be more accessible. With the VAT being off of lubricants, it's going to be way more accessible for the consumers to access the oil and us as distributors.
After the break, we will be joined by tax specialist Susan Watson, and she will be talking about the value-added tax return. Focus on GRA will be back after this short commercial break.
The Value-Added Tax Act, Chapter 8105, requires every person charging VAT to submit a VAT return to the Commissioner General and remit the VAT collected each month to the Guyana Revenue Authority. Returns and payments are due within 15 working days after the end of the month. Building cement, cement board, and sheetrock are now zero-rated, following an order signed on May 17, 2022 by Senior Minister within the Office of the President with responsibility for finance, Dr. Ashley Singh. The zero-rated status enables suppliers to reclaim any VAT paid at the time the order was issued, while also ensuring that these materials are sold to consumers VAT-free. VAT-free. For more information, contact GRA's Tax Advisory Services section on 227-6060 extension 8000. Check out our YouTube channel or visit us on Facebook, Instagram, Twitter, and LinkedIn to learn more.
Joining me today is Ms. Susan Watson from our Tax Advisory Services section, and she will be answering questions relating to value-added tax. Our first question is, when is the due date for submitting the value-added tax return?
Every taxable person is required to lodge a tax return and make payment, if there's any, for each tax period within 15 days after the end of the period. This does not include weekends and holidays. It is important to note that a VAT return must be submitted whether or not a person is engaged in a taxable activity in the period. In this instance, a nil return would have to be submitted. The tax return is required to be filed in a format as prescribed by the Commissioner General, which includes electronic filing through e-services, or alternatively, a hard copy can be submitted. Payment of taxes can be made via MMG Bill Express and any of the following banking institution online bill payment facilities: Demerara Bank, GBTI, and Republic Bank.
The second question we would like you to answer, Ms. Watson, is What is the penalty for submitting a VAT return late?
An individual who submits their VAT return after the due date will be required to pay a penalty of $1,000 for each day or part thereof that the return remains outstanding, or 2% of the tax outstanding, whichever is greater.
And finally, can you tell us, Ms. Watson, what are some important information that the value-added tax return should include?
When completing a VAT return, the following information must be included: the registrant TIN, the tax period in which the VAT return relates, legal name of the taxpayer, business name or company name, the address. Additionally, the VAT return form requires VAT registrant to give details of input VAT, VAT paid or payable in respect of taxable supply or an import of goods by a taxable person. An output tax is the VAT charge or chargeable on a taxable supply made by the person.
Thank you, Ms. Watson. If you need any additional information, feel free to make contact with our tax advisory section on the telephone number listed at the end of the program. Before I go, let me remind you to visit our website at www.gra.gov.gy for more information. You can also send us an email at grapublicrelations@gmail.com.